Good morning. We are live. What's up, guys? How we doing? Hope you're having a good morning here thus far. Market is open, and we're getting a lot of wicks, a lot of reversions. So we're going to let this thing work out here for at least a couple more minutes. But I'm looking to put on some trades here today. So let's see what we can grab. What's up, guys? John, Tallahassee, Future Maury, C-Mac, Javaz. What's up, guys? Hope you're all having a good morning here so far. Oh no, TC. All right, guys, so today we are doing a 50K account giveaway with Take Profit Trader. Okay? All we got to do is hit 300 likes, which should be easy enough because we're starting this early. So like the video. If you don't do it, though, we might not get there. So 50K account giveaway with Take Profit Trader. Hit like, 300 likes. And we'll give it away. All right, so hope that works well for you guys. All right, but I am waiting here to see if these little wicks, man, can clear themselves up. Because right now, this is absolutely turning into a bit of a range. I mean, if we look at the 2-minute chart, it becomes a lot more clear. We get a pop off the open, fade, bull bar mixed in, and now we're getting bull bars mixed with smaller bear bodies, which tends to indicate that we're seeing and especially when you get like this monster wick, these wicks here, right? There's the buyers and sellers relatively evenly matched. Okay, the Nasdaq right now is sitting minus 0.4%, not really a big deal. We look at the main, the 5-minute. The range on these bars is actually not too bad. It's maintaining, high 40s into the 50s actually, which is pretty good. That should drag the ATR up well into the 30s here. We're already at 30. But once we get the full 10 5-minute bars after the open, that ATR tends to essentially peak. Usually between 10 and 20 bars after the open. 5-minute bars. Right? Bruce Patel, what's up, guys? Goodness, look at that. Now, as far as news today, schedule news, there's not really much on the schedule. We got retail sales this morning, industrial production about 40 minutes ago. That's about it. As far as schedule news, right now, keep an eye out. We're going to be watching. I'll let you guys know if we get any random tariff news. Now, tomorrow, of course, FOMC. Okay, so that's a good thing, by the way. Volatility lately, yesterday, guys, was a crazy range day, like pretty much all day. So if we can get some volatility, I would love to see at some point here this market turn a lot more into a trend market. I mean, you look at the daily chart at the bottom, man. We can make money in a range market, and we've been doing okay. But I want to catch some big trends. I want to see if we can catch some more. We had, maybe a 100-point trade a week or two ago. I want to catch some more 100, 125, 150-point trend trades plus. And start putting up some big numbers. Putting on some risk. I want to put on some risk here. But I can't justify putting on, a lot of risk. I'd say more than 10 or 15,000. When we're not in a trend market, there's just not the upside to justify that. Tony, good morning. Brandon, how we doing? So on a 5-minute bar like this, I mean, even if we came up and closed up here, gotta be careful because we might just see a pop up through. Maybe you take the intraday high, and then you fade back into the range. A lot of people get stuck on that breakout. This happens to a lot of people, and I don't think a lot of people really understand what's going on. But they'll trade all day, betting on breakout after breakout after breakout. They'll bet on this breakout, and then it'll fade. They'll bet on the bear breakout. It'll fade back upside. And by the end of the day, they've lost 6 trades in a row. You're like, what the hell's going on? Well, you were trading. Hey, I've been caught doing this too. Ideally not 6 times in a row, but a few times you can make that mistake. You got to stop yourself, stop the bleeding early on that. Start trading the range when it becomes more and more clear. Gaines, it's 2 trades, brother. You're good. Don't worry about it. Everyone's too worried about the outcome. 1 trade. Oh my God, why is this trade gonna stop me out? It stops them out. They get all worked up. They take 1 trade. They get high on their own supply. Just relax. This is a game of many, many trades. You're going to have a lot of winners. You're also going to have plenty and plenty of losers. You guys care too much about the short term and not enough about the long term. It's the reality. At least some of you guys. When I say long term, man, I mean I don't mean like 25 years. I'm not that guy. We want to make money now. No one knows. You know, hey, I think that most of us are going to live a lot longer than we anticipate. The way that everything's moving, the lifespan's going. I think we're going to see a substantial bump in our lifetime if you're, reasonably young. Which again, young is taking on a new meaning now. I think, like under 50 or 60. But we still want to make money soon. Okay, so when I say long term, I'm talking like 3 to 6 months out, you can really see that edge start to play out. I'm not talking 25 years, man. I get it. A lot of people are like, play the long game, invest for the future, invest for 45 years. Yeah, that's great. But like, man, when you're broke, it's like, I got to pay rent in 3 days, bro. Come on. I get it. But you got to push that down and focus on, okay, hey, in 3 months, I want to have an edge that plays out. Focus on that. Otherwise, in 3 months, you're going to find yourself just digging a deeper hole with no edge to be seen. And look here, you get a big wick. What we just talked about? We just talked about this. Hey, we're probably going to see us take out these highs and then see a fade. Range market, right? I want to give this account away today, though. So let's hit that like goal, and we'll give that thing away. What do you say? It's burning a hole in my pocket. Chris, that lesson of Nico stuck with me the most. Never expect unreasonable things from the market. Now you can bet on unreasonable things happening, but the math has to work. You have to say, okay, what do I think the probabilities is here? Maybe 25%? All right, well, if the reward to risk is big enough, the math can work. But when you start taking unreasonable bets in a range market, you get chopped up and you're out of the business. You say, trading's a scam. It's like, no, you just didn't understand the context. Like most other people. And by the way, it's not easy to understand the context. It takes a long time to get better and better and better. It doesn't mean you can't make money, though, soon. God, I can't stand when people are like, you got to pay your dues, trade for 15 years. It's like, bro. Who knows, man? Got to make money as soon as we can. But we also should plan for the future, but we need money now, bro. All right, we got 1:20 left here on this 5-minute bar. This big wick and fade back downside. I mean, it has me semi-interested. The only issue is this 5:20 is kind of in the way, though we've been around this so many times now after the open. I think people are kind of writing it off. You know, the risk on this would be reasonable. Maybe 4,500 bucks if we can get a half decent fill. Now again, you have to look at this and say, okay, well, what are both cases, right? Don't just look at your case. Well, the bull, if I were going to go short here, the bulls are looking at this as a really, really aggressive ascending level of support. Oh, bears, don't do that. Just give me a reasonable close. Like here would be beautiful. Wow. Look at this. Finger on the button, I was ready to rock. Look at this. We got to close right inside of the previous bar's body. Well, the previous bar's open. Low of the body, right? So I got to hold off. I was ready to hit it too. What are you guys hitting today, by the way? It's been at least a few trading days now since we've checked in. Are you guys trading evals, funded or personal? And how are we doing, by the way? If you care to share, which you certainly don't have to. I don't press. Faba, blew the evals, that's okay. What are we gonna do, lay down? Get up, try again. Bruce Lee hitting fundeds, base hits. Good plan. Tone, personal, up on the month. Good, man. Over a couple weeks into the month, that's a good track record. Obviously, I guess it depends on the sample size, right? If you've only taken 2 trades, that might be a little bit less meaningful depending on what your edge is, but if you've taken a sizable amount of trades, that's good. The more trades you've taken and you're still green, the more set in stone your edge is. The more confidence you can have that the edge is real and it's not luck. You know, I've worked with a lot of people, not a lot, I've worked with a couple of people who have come to me and said, you know, and by the way, we'll start working and they'll be like, you know, pretty green. They're kind of beginners. And then eventually, you know, we get in a couple of months and they're actually doing really well. And they're sending me their data. I'm studying through their data. I'm looking through everything. And I've had it happen a number of times where they're like kind of not happy about it. And I'm like, what's up? Like, what's the problem? And they're like, I think I'm getting lucky. I don't think, like, it really feels like I'm getting lucky. And I look at their data and they have a sample size of 225 trades. And I'm sitting here and I can calculate their edge. And I'm looking at them and I'm like, you are not getting lucky. If this said 4 trades, I'd say maybe we got lucky. But the sample size is pretty damn large. It's not 10,000, but we don't need 10,000. The probability that you did get lucky over like 200 trades, even 100 trades with a sizable edge is very, low, statistically speaking. That's just your brain coming in and saying, you can't do this. What do you think you're doing? What, you think you're a trader now? No, the numbers don't lie. Your brain lies to yourself. The numbers don't. So the bigger the sample size, the more faith you can have that you kind of know what you're doing at some point. So 9 trades, okay. It's kind of light, right? But it's not 2, okay? So keep getting the trade count up. As that goes up, if you continue to have edge, you can have more and more confidence that you didn't get lucky. I'm going to get long here. I like this setup, and I'm going to place this right there with the anticipation that this 50 is going to creep up. Now, if this were to dive down and stop me, it's like, I want to be out anyway. That's fine. But I assume this trade's going to take some time here, right? And assuming it does, this 50 will creep up. Cover my risk anyway, not that I care so much, but I know that people watch it. Again, I don't base trades off the 50, but people watch it, so I'd prefer to have it in my favor if I can. And we'll just see what we can get here. Again, range market, range market, range market. There is kind of a top around 22.2, so I'm keeping an eye on that. But I'm curious to see how much of a push we can get here. A little bit of a pop through the high of day. Kind of weak, honestly. Maybe a point. Risk on this trade here is about 3,600 bucks. So kind of a smaller stab for me to kick off the day. Let's see what we can get. I'd like to at least try to cover my risk. But yeah, I mean, let's see how the, again, range market. So I got to be careful the more we extend. Gonna get ready here and see. This is the point where things start to get a little, you know, things are a little bit easier to move higher if we get like a bar rollover or two. Because this would definitely be pressing the little range mentality that I know the bears have. But I don't think mid to high 30s is so unreasonable. I don't think that's a really, really unreasonable ask. So let's just see if the bulls can get it done. Mario, good morning. How we doing? All right, range on that last bar is about 45 points. I'm sorry, range on the last bar is about 35, 36 points. Range of this bar so far, we're looking at about 30 points. Yeah, I mean, my target, you know, it's pushing the limit a little bit, but it's reasonable. Here comes the rollover, which is good, gives us kind of a reset. Now let's see if we can push up the target. I'm not really into the idea of taking it early, at least on this trade. You guys know when I do that. But of course, if I absolutely had to, I wouldn't be against doing so. But right now we don't have to. Decent little push. All right, Bulls, get us up through 130. See if we can't get that hit. There we go. So, you know, you got to look at this. Currently, I am a bull. Yeah. So every bull who's in this trade is going to be like, okay, there's an ascending support. You know, we have yesterday's level up here. It's like, okay, but what are the bears looking at is what I'm more concerned with. The bears are looking at this and seeing ascending resistance, range market up. Look at the daily. These things haven't been succeeding very well. Yeah, I don't think this bar is going to go green on the day, at least not yet. That's what the bears are thinking, right? They're like, we could really use a bear bar to mix in here. It's about time based on what we've seen so far today. So I want to think about the bears case and then say, do I overwhelmingly agree? More than 40%. And in this, you know, in this second, my answer to that is within reason. No, not really. I don't really agree. I think we should probably see at least a pop through 22,140. But we're always dealing in probabilities, never certainties. Okay, so people take a trade. They say, I think this is going to happen. Then it doesn't happen. They go, wow, I'm not very good at this. Or wow, I should just quit. Emotional. All right, so I want to do a giveaway here today if we hit the goal, by the way. I've got an account burning a hole in my pocket, so don't let me down. I want to give this to one of you guys. Again, that's going to be a 50K account at Take Profit Trader, test account. Well, here's that little bear bar we maybe talked about. We got pretty damn close to target within about 3 points. Fear and Greed Index just hit, by the way. Not that it really means much, but I think it's interesting to look at. 61 out of 100. I mean, that indicates greed, I suppose. In my head, that's more neutral. You look at the daily chart, this is not a greedy market. Chris, joining from the road today. What's up, brother? Doug just passed a TPT, Take Profit Trader test today, working on a new eval. Well, maybe you'll win the giveaway today and then you'll have another one to work on. I mean, those Take Profit accounts are a hell of an asset. Daily payouts are very, very nice. All right, ATR here, by the way, on the 5-minute chart is sitting in the 30s, low 30s, sitting about 32 right now. ATR, by the way, is the average range of a 5-minute bar, so that gives us an idea of volatility currently. Which, you know, is not incredible. It's not incredibly high. Lately, it's kind of average. But I can't complain because we've seen some very low volatility days in the last couple of months. Well, we're about 5 points in the money here. At best, so far on the trade, we've been about 30 points in the money. But typical trader trap. I should have taken it early. Okay, yeah, hindsight is helpful, I suppose. If you want to go straight at it, like a dummy. And then you know what you start doing? You start taking every trade early. And then you know what you start doing? Early isn't early enough because it turns around before your early take profit. And then you start taking it double early, and then triple early. And then your reward to risk on a 50% probability trade is, or 60% probability trade is 1 to 4. And that is negative expected value, just like that. All right, now so far in this little bull push that I'm currently in, we saw one bear pullback and then kind of, I wouldn't necessarily call this a second leg. This was a second here. If we look at the 2-minute, it was kind of a second leg. Probably this is that same move of those 2 5-minute bars that we just saw. But this here now, I'm starting to think like, hey, do we end up seeing a little bit of a trading range? And if so, I want to see another test of this high and see how we react around that high. And if we, if we fade, the idea is screwed anyway, and I just want to get stopped. Well, let's see if this turns into a trading range before it fades. We've been seeing that a lot lately, but this push, arguably is much less strong than we saw yesterday. I think, yeah, yesterday. We saw that exact thing play out. We saw a strong push and then a trading range, and the trading range was very unforgiving. So we didn't even take a trade on stream yesterday, which is always a little, disappointing, but not that common. All right, this is the song we needed, man. This one always seems to hit when we're in a trade that's kind of going sideways here. I gotta say though, it really is interesting to trade. I mean, obviously, you trade long enough, you're gonna trade through basically every market environment. But it's still, to this day, it's always interesting to see the market shift so hard. Like the Nasdaq here. I mean, we're fighting for a 35-point move. Back during really hardcore tariff talk a couple of months back, the thing moved, what was it, 400 points in 2 minutes? And we saw that happen a few times. So then you come into a market where you're fighting for 30 points. It's like, man. So, I do think it's very helpful when you're trading in a super volatile market. Hey, if you need to, widen out your stops, widen out your take profits, size down if you can. If you're trading 1 micro, you're just going to have to make do. But if you can size down and widen things out, do that to make your dollar amount risk similar to what you're used to when volatility picks up. Otherwise, what happens is if you take a couple of losers on a really volatile day, a couple of 150-point losers, because that's what makes sense to risk, because it's really volatile, right? You spend the entire range market trying to make it back because you didn't size down. Fatal error that can cost you months. All right, now again, risk here on this trade is like 3,600 bucks. Reward is kind of similar. Now again, depending how this develops, that 1-to-1 is kind of my minimum here. If things developed really in a strong way, like we got a couple of big bull bars closing near their high, it's possible that I would extend that reward out. Obviously, risk is going to stay where it's at. At least the max risk will stay where it's at. All right, we are back. Well, we're getting a little bit of a push into the green, and then it fades back to break even. The idea still stands here. Though if we do enter a range market, I'm very curious to see how we react around that high. That, of course, is this high here. The more bars that get set, again, every one of these bars is 5 minutes. That's not, you know, nothing as far as a chunk of time for stops to accumulate above the high. So if we are able to test that high, you know, I think 3 points, 3.25 points is fine as far as a stop hunting push for, you know, 15, 20, 25, 30 minutes after the fact. Meaning enough stops are there to push me a couple of points to target. Jvaz says, Nico, how many ticks do you set for your stop loss and profit target? Well, I mean, it depends on the trade, right? My default is 160, because it's 4 ticks to a point, 40 points. But then I shift things around depending on the trade, if I need to. There's a big old bear push. Look at that. Bears breaking that little sideways movement we saw last couple of minutes. Okay, we've got 2 minutes and 38 seconds left here on this 5 minute. Let's see if the bears just end up sweeping this low. So, if you're just joining us, by the way, we didn't buy this like here. I entered this trade on this wick pullback here. So at best, we've been about 30 points in the money. I don't take trades off early because losing traders do that. It looks smart in the short term and everyone's like, wow, great trade. And they fucking, you know, like whatever. And then they, you know, in the back end, they're just losers. Losing traders, that is. So I don't take stuff early if I can help it. And there was no reason for me to take this early here. So if it turns around, turns out to be a loser, so be it. We'll move on. But I mean, the bulls, they're still, EMAs to me are so, they're just useless. But everyone watches them. So I throw up a 20 on the 5. And people pay attention to it. So let's see if the bulls, you know, they're trying to hold it. They're kind of struggling a little bit. But, you know, we got to remember, range market. So when we were pushing up here, I was saying, you know, it's kind of tough because we're really making a push outside of the range and just barely didn't get enough. We're about 3 points shy. Big old wick here, though, out of the bulls. You guys see how that happened, though? Look, I mean, when we entered this trade here, this rolled over. We got a quick little pop on the rollover, I remember. Then we pulled back, and I bought here. I think I bought the bid. We pulled back in, got me a fill. And I placed my stop just below, this was the signal bar here. 1 point below the signal bar. And at the time, this 20 EMA was right below my stop. But like we talked about it, now it's dragged way higher. So now I'll get stopped if we give out the bottom of the signal bar, which to me is more important. But also the 20 EMA that's there that I know people watch, self-fulfilling prophecy and nothing more. But, you know, I want to give it both chances. If we end up breaking that downside, we're probably going to backfill the whole channel. And this stop out would put us in the middle of this big channel. I don't like to do too much in the middle. So I'll just stop myself out if we get there. Yeah, I like the way this is structured. Jerry, I'm trading currently 56 MNQ contracts. Copy trading. Across a bunch of accounts. All right, so at best on this trade, we were 30 points-ish in the money. Again, risk here's 3,600 bucks, so at best we were maybe, I don't know, a little over 3,000 in the money. And these bulls keep stepping in, trying to hold that 20, man. I don't know. All right, 60 seconds left here on this 5-minute bar. These wicks back upside are kind of brutal to the bears, but the bears keep trying to reclaim. Well, I mean, break even on the trade here. You know, you see a lot of these in these range markets. You end up with a lot of trades. You know, they go 30 points in your favor, 25 points in the red, back to break even. If you ask for too much in a range market as far as points, then you end up in these situations every trade. I mean, 35 points is hardly a hell of an ask out of the Nasdaq. Okay, ATR when we entered was right about 35. Right now, ATR is sitting about 26, 27, which is still all right. But if we're in a market like this and you're taking trades looking for 100 points, 150 points, you have to take a step back and look and say, okay, let me think about this. What's the range so far in the entire day? $100 points. Embarrassing. For the Nasdaq, that is embarrassing. Should you really be making that ask out of the Nasdaq? Probably not, right? And when you're in these trades too often, they tend to just get frustrating and you start to make bad decisions. But man, 35 points, I'm fine with that. I don't really want to take much less. All right, I'll be right back. All right, we are back. Man, this market. We can just see a little bit more volatility. And you know, you guys know how I feel about this. I cannot stand when people take a losing trade and they're like, got chopped out. It's like, no, it's because you set a 5-point stop loss on the Nasdaq. Dumbest thing you could possibly do. Of course you're going to get chopped out, but you didn't get chopped out. You just took a horrible trade. I mean, you really structure that thinking probability is half decent. You'd have to time it perfectly, which is never going to happen. Maybe 1 out of every 300 trades it'll happen. But what frustrates me is not chop, which is total garbage and an absolute excuse in almost every single case. What frustrates me is the volatility. To make money, we need the thing to move, and we need to move relatively smoothly. I don't care which direction it's going. I don't care if it's a trend day. I don't care if it's a range day. Just move. And lately, man, we've been seeing this Nasdaq. Again, been able to make some money, but the Nasdaq has been moving 80 points in the morning, 60 points, 100-point total range. It's barely enough time to even get setups rocking and rolling. Joe says, question, if ATR is dropping, does that change your stop loss theory? I get you put it depending on the setup and context, but do you take ATR into consideration or only on the profit target? Hey, Joe, do you mean like when I originally structure the trade, or while I'm in the trade, do I make adjustments? While I'm in the trade, if you're asking, while I'm in the trade, do I make adjustments? The answer is, of course, if I need to. But too many people want, like, rules. Like, hey, if this happens, do this. Because it's easy and it's spoon-fed. The reality is the market, you can't spoon-feed. It doesn't work. You have to have an opinion that's a little bit more dynamic. So, will I adjust the stop order if I feel like I need to in the trade? I mean, listen, sure. Let's say I'm in a trade, I'm in this trade. And let's say, as soon as I enter, we get 2 bars that pull back and go 10 points in the red. And there's a really clear wick low. And it's kind of like a new wick low. And then we get a push and I'm, 20 points in the money, but I'm looking for a 30-point take profit. If ATR is falling, what I might do is I might adjust the stop, take the stop order, and adjust it up to that new low, 1 point below or whatever. All of a sudden, yeah, sure, I had the original risk on that was relatively large, but now I've tightened things up to adjust for kind of what the actual heat that I took on in the trade was. That I can make sense of in specific scenarios, but what everybody likes to do is they're like, okay, I need rules. I need rules to cover my risk as soon as possible. Okay, I'm 6 points in the money, let's move to break even, as if that has any edge whatsoever. That doesn't make any sense. You're just gonna get chopped out, and then you can tell everyone you got chopped out, and it's an easy excuse. But all that being said, my kind of rule of thumb is unless there's something really clear that calls for an adjustment, I need to leave it alone because too many people over-adjust to their own detriment. When you start over-adjusting, it just causes problems. You think you're doing something good, but you're not. You're causing issues. In an attempt, by the way, to protect your psychology. Okay, now for example, on this trade, I very well, when I was, 25, 30 points in the green on this trade, again, I bought this like right here. I could have moved this to break even. It would have pulled back, stopped me out of break even. That's great and all. And here you might say, oh, well, you should have done that because here, if it stops you out, that's $3,600 down the tubes. It's like, okay, fine, but you're focused on one trade. We talked about this at the beginning of the stream. That's a huge mistake. Everyone's all emotional about one trade. When you're this far in the money and you move to break even, if the trade is still valid, you were long for a reason. Don't you want to give it at least some room to take on some heat? Did you expect to time it perfectly, right? So if it pulls back and takes on some heat, if the trade is still valid, it's very reasonable to leave it on and see if you can get that curl upside, or if things change and it just stops you out like we just saw right there. Okay, so now I'm looking at this full thing, this full day's range, and saying, okay, do we end up just backfilling the whole trading range here? Because clearly this tried to turn into a trading range, but the bulls weren't really able to hold it up and we kept giving out lows. And then we just gave out another low, which is the one that stopped me out on, which is fine, by the way. I actually got decent fill, so rather than 3,600, it was 3,500. So now I'm looking at this and I'm thinking, okay, this here is a full, well, this here's the day's range, about 105 points-ish. Okay, so now I'm thinking we're kind of in the middle of that range. I'm not big on doing things in the middle of ranges if they're really clearly defined ranges. However, I'm more willing to do so if it's the full day's range, because it's less tight, less obvious. Like if we look at the 2-minute chart, clearly what we're seeing here, okay, the bull argument here is going to be descending support. The bear argument, hey, descending resistance. But you could also call this a wedge. Every setup you look at, you could call 10 different things. You just have to look at it and say, hey, what makes sense for me to do here? That if I took 100 trades, it would work, 55 to 60% of the time, minimum. And people forget that there's the 40 to 45% of the time that it's not going to work, and that's okay. Still make money when it's over. All right, so let's see. Let's move on. See what else we can grab here. Bernard, how do you feel about this market condition? It's tight, man. Volatility is low. And when we're talking about the Nasdaq, it's that right now is the most frustrating thing to me. Again, we've been making money. We've been doing okay, but if it's a trend market, we would have been making a lot more, most likely. So, we look at this, the daily, bottom of your screen. This is one of those scenarios, and we've probably all been here many times, some more than others. This is one of those scenarios where you look at this and it's like, okay, can we do something here? It's time to break. I don't care which direction. Honestly, I'd probably prefer that we break downside. Because right now I'm looking at this and kind of out of spite, I'm looking at that and I'm like, all right, market, you don't want to move? I know how to make you move quick. Fall off a cliff. Everybody rushes and goes, oh my God. And then it moves, 600 points in per day. And the range is big. And now we as traders can make more money. We take that money, we drive it back into the market at cheaper prices. Jorts says, hi Wrench, I found myself passing evals left and right a couple months ago. Then getting close to payouts, and last day being greedy and blowing accounts, found myself doing this pretty often. Yeah, I mean, listen, that's kind of that's a bit deeper of a conversation, but I mean, I'll tell you what, book a consult with me and we'll get it fixed. I know exactly the problem that you're having. So it ended up taking a long 4-month break. Oh man. Finally thinking of going back in with a clear mind. I know what I'm doing wrong. I'm in a better place financially. Yeah. You might know what you're doing wrong. The problem is a lot of people end up making the same mistake because emotions are at play. Listen, guys, every mistake that you have made, I promise you this, every mistake that you have made that you think it's like this is, this is independent to me, I'm the only one who's made this. I've made it, and I've made it plenty more than one time. Lewis, on Apex for the trailing drawdown to stop, let's say you hit the target, do you have to close, or as soon as it passes the amount, you're good? Are you talking about like in a funded account for just to get it to stop, or are you talking about to pass the eval? Once you're above it, it's based on unrealized. So once you're above it and it hits, even if you fade back down and stop out, it'll stay. It'll stay put. You just have to get that balance to drag the trailing drawdown to the stopping point, even if it's just unrealized. But to pass the eval, you have to close. All right, ATR is sitting at 27. Now, that average range of a 5-minute bar bottomed out around 26-ish, and now it's creeping slightly back up, which tells me that we've probably kind of found, hopefully, the bottom as far as ATR, which is volatility right now. 27, just for context, on a 5-minute chart. A couple months ago, that's what we were seeing on a 2-minute chart. So, volatility is certainly down. All right. All right, we got 3 minutes, 20 seconds left here on this 5-minute bar. And we will be pressing the top of that range. Nico, any thoughts on such low volatility lately? Summer? Yeah, it's common. Beginning of summer, a lot of times volatility starts to slow. The news is just stale. I think everyone's bored of the news lately. It's just the same thing over and over again. Tariff talk is getting stale. There's not a lot of actual market moving headlines that haven't already been baked in, and you can say, oh, well, there's this and that. Well, then why isn't the market moving? Okay, so if you want to argue that point, I mean, fundamentally you're wrong because volatility's low. So we need to see someone shake things up. And I know it sounds crazy, but right now the best way to do that is to just see this market dump, fall off a cliff. And then you'll get texts from all your friends and family and they'll say, man, I saw on CNBC, Fox Business, whatever. How you doing? You good? Market's crashing. You need anything? It's like, nope, making more money than I ever have. That's the common misconception about traders is, you know, they think if the market's going up, traders are always doing well. If the market's going up really, really slowly, that's not great. But if the market's crashing, there's a lot of opportunity. And again, as traders, you can make more money in higher volatility environments and you can drive it back in at cheaper prices. Obviously, you want it to go up over time. We're not betting against America. But for short little bursts, if we can see quick little crashes, best case scenario, you can make a lot of money, drive it back in and make more money on that money when it recovers. Okay, so there is the rollover. That was kind of the move that we needed on that last trade. We just got wicked out, man. You know, sometimes that happens. That's just kind of a way the dice lay. We got within 3 points of target, wicked out our stop, man, within a few ticks, and push, getting close to what our target would have been. But you just got to move on, man. All right, so that bar closed. We wicked above, faded back quick, closed beneath this previous high of day wick high. I think we're in a range. I think we're in a big trading range here, and to ask for a big giant push higher quickly is a bit unreasonable. So we got to keep that in mind here and just do what makes sense. Cryptors, Nico, this is a cup and handle play, correct? You can call it whatever you want. The bulls are going to call it whatever they want. The bears are going to call it whatever they want. God, listen, guys, the whole like, okay, look at that move. See that? You can look at any chart and see, hey, that's a head and shoulders. That's a bull flag. That's a cup and handle. Just focus on price action. Everyone likes to I want the cheat code. I want to name something, and you can name things. That is helpful, and having patterns in your head, I wouldn't say is useless. It is helpful to try to recognize things. But a lot of people, man, they'll look at something and be like, this is this pattern, so it has to go this direction. It's like the probability, the best you're ever going to get in a range market is 60%. In a trend market, maybe you'll get 70%, tops. If a cup and handle or a bull flag or whatever had an 80 to 90 to 95% probability, the market would cease to exist because there would be no other side. %100% cryptors. And by the way, not to say you can't look at something and say, you know, that kind of represents a bull flag. What do I think that means? It's just don't, you know, yeah, we've all seen it. People will sell like the big books of like patterns. And it's like, hey, if this happens, you do this. And that doesn't mean anything. Okay, you do that, and then what? How do you manage the trade? How do you manage risk? Do you adjust anything on the fly? Where do you put your target? What's a reasonable ask to make? What's the volatility? Two people can take the exact same trade, and one can have a lot of edge, and the other can have negative expected value. The pattern is meaningless without context. It just means nothing. But with context, you can use it to your advantage. All right, well, I'm not really seeing a headline that came through that caused that big wick downside. So I gotta tell you, I think this is bears unless we're gonna get a headline coming through. I think what we're seeing here is bears saying, nope, range market. So what I think we need to do is put our head down and scalp the outskirts. Nico, when you refer to price action, are you talking about ATR, volatility, where we are in price, whole numbers, etc., all of it? All of it, and the relationship between buyers and sellers represented through the candles. It's simple, simple stuff. Okay, what's hard about it is understanding the context and seeing as many things as you can. So you want to be looking at the data and be like, all right, hey, what does this last bar tell us? And by the way, guys, price action is king. It always will be. All the patterns, all the, you know, take this one trade a day and make a living in 45 minutes. It's all based on price action, and it all ignores the context of the price action, which is the entire other half of the pie. You need both. Without both, you shouldn't waste your time. I promise you, you're not going to find success if you don't use both. Okay, so, but with both, what can we do here? We can look at this and say, all right, well, in more of a trend market, or at least in a range market in the lower end of the range, what do we have here? We have 3 consecutive bull bars closing reasonably near their high. If that's all you had, guess what you're doing? You're buying the rollover, because that's what the setup in the book said to do. No, wrong. You shouldn't do that because the probability is negative expected value. Now, was the probability good enough for me to take a short on it? No, but we also got that big wick that looked like a news bar, but it doesn't seem to be. But what are we in right now, contextually? Right? And why didn't I buy that rollover when you guys have seen me take a setup similar to this a million times in the past on live and do well trading that? Because 2 things. We're in a range market. You look at the daily chart, bottom of your screen. Breakouts have been failing at an obscene, ugly rate. Okay, and you look back here. Second thing, we wicked back down, closed beneath this wick high. What does that tell us? The bears step in and say, I don't know. And the bulls step out and say, yeah, I don't have a lot of faith in that. And we close beneath this low. That shows a slight weakness. Now, when I say that, a lot of people are going to look at that and say, okay, it shows weakness, so I should just short that whenever it happens. No, this is a spectrum that requires you reading the price action and understanding the context, putting it together, and then making your decision based on probability and risk reward. Okay, it's a little bit more complicated than just, if this happens, do this. But if you just lay down and accept, that's what I need to do to make this work, you have to have both. You can learn it very, very quickly, and it becomes like second nature. As soon as this is forming, I'm thinking, all right, well, maybe the bulls are going to see, this as a descending resistance, which gives us room, right? If this is the descending resistance they're going to look at, or maybe even this, the ascending resistance, or maybe even this, that would give us room. And if we close above this level, that shows a level of confidence that maybe I would buy that rollover and take maybe a 20, 25, 30 point scalp out of it. Just risk the signal bar and be done. Yeah, but instead we wick back down and close here. That to me shows insecurity out of the bulls. Okay, and it seems like a really small thing. It seems like I'm reading tarot cards, but it's not. That's data. That tells us what was everyone thinking? What was the balance in that moment? And I get it. This stuff is boring. Nobody wants to hear this. They're like, nah, let's just make millions, bro. It's like you can go spin a slot machine at stake.com right now if you would like to do that. If your brain requires more stimulation, then trading is not for you. Maybe gambling is, but then money's not for you. All right, here we are, getting a big bear bar. Let's see if this ends up closing near its low. We're coming into the 5-minute 20. Pennies, yes, 100 people take the same trade, you're gonna have 100 different results. Yep, assuming they're not just copying each other, yeah. Because everyone's gonna manage a little bit differently. You just have to look at it and be like, okay, where do I think most bulls are looking? Where do I think most bears are looking? Are there any stops from the enemy that have probably accumulated somewhere that I can use as rocket fuel to push me in the money? Yeah, maybe there are, or you know what? No, there's not really. So I need to maybe get a little bit more confidence out of this trade because there's not really stops that I can use. Or you could look at it and be like, yeah, hey, if we had a nice bear continuation sequence, I could probably put a take profit if we got to close like here in this region. I could probably put a take profit here and use this low a day for stop liquidity because this has been here all day. There's probably a whole bunch of contracts down here. Stop market orders, sell orders out of the bulls. And if we take those out, we're probably getting at least a 10, 15, maybe 20 point push that I can use as rocket fuel, extra liquidity to get me to target and get some extra points, which adds to the edge. Yeah, let's do that. Okay, then can I take a sloppy setup? No, I shouldn't, but it doesn't have to be pristine because I have that added edge of, hey, if we take that out, I'll get some extra points out of the stops. Right? That makes sense, right? Start thinking like that, and you will improve your trading in tenfold in a week. And by the way, if you want me to just rail India and fix a whole bunch of shit and leave you leaving with massive clarity in a half hour, just book a consult with me and we'll get it fixed. Because I've been there. Wherever you're at, I've been there. Dominic says, this looks to be turning bearish. Yeah, you know what? Dominic, if we end up taking out this low, then I 100% agree with you. Then I think what we're looking at is this descending support. And I think bulls would probably step in somewhere in this region. However, in that case, if that were to occur, and we take out this low, then that descending support is so weak that it'd probably end up breaking. We'd probably end up taking out these lows, in which case I would be looking for a short entry. However, right now we have to look at, okay, well, what are the bulls looking at, right? The bulls are probably looking at this, right? With the 20 EMA on the 5. That's what they're looking at. Look at both sides and see, hey, do I agree with one side more than the other? And is my setup present? If it is, and you agree with one side more than the other, take the trade, because probability for you is probably the way that you manage based on your experience is probably in your favor. All right, I've got a 50K account at Take Profit Trader burning a hole in my pocket that I want to give away. So let's hit the goal so we can give that to one of you guys, and you guys can get a free account that's worth a few $100 for daily payouts. All right, this is interesting. This is very interesting. Let's see where this bar closes. We're 34 seconds out. Kind of below 86.50. Come on, Bears. 10 seconds. We have the bulls. Remember, looking at this as an ascending support. Yeah, too weak of a close out of the Bears. Can't take that. What's up, Mike? How we doing? Hope you're having a good day. David, yeah, that's a good question. Do you get bored watching the charts? I mean, yeah, sometimes, but it's like... You know, there's only so many things in life that you, like, really enjoy doing. Right? I like to train really hard. I like to trade. I like looking at charts. The hard stuff, I guess. And this is one of them. So even when it's boring, I'm enjoying it. Even when it's like, even when I might seem frustrated with volatility and it seems like, man, this is kind of like today was kind of a boring day, or like the stream, not really much happened on it. Like, I'd still rather be doing this than most other things. So compared to the baseline, yeah, I can get bored watching the charts, but my baseline for trading and watching the charts is pretty damn high because it's really, really challenging. I mean, it's a constant, you know, mind puzzle that we have to try to figure out. But, you know, I think a really good... I've always said, like, doing hard stuff, like a really challenging puzzle or something like that. I've always said, like, if I want to think really hard, I want to be paid for that. And the market works really well because I like to sit in a room and I like to think. And the market, we have to think incredibly hard and it's exhausting. But if you figure it out and you get it right over time, you get paid and you can be compensated extremely well. So to me, it's like the perfect daily challenge. David, you optimistic about Powell tomorrow? I don't know. Honestly, I'm kind of indifferent. I don't really care. I just hope the market starts to move. Listen, the Fed's going to do what they need to do. The Fed's primary job is to steer the massive tanker ship called the U.S. economy, and they're not going to take any chances. They're always going to go slower than they possibly could, because if they go too quick, they're going to make mistakes. And them making mistakes is their biggest fear because they need to make sure that they can look good in hindsight. And making a mistake from going too fast makes them look worse than getting it right, but having it happen more slowly. So the Fed stuff is always going to be slow, and it's a lot of repetitive statements. And FOMC is whatever, you know, it's 50-50. The probability is not 50-50 of what they're going to do, but what the market does based on what they decide to do, because the probability of the actual rate change is not 50-50, the market knows that. So what the market does based on FOMC is basically 50-50. So don't trade the FOMC, in my opinion. It's 50-50. But try to understand what that means for the market, and maybe you can work that in. But I'm not fond of trading news because the market is so efficient that when you're trying to trade news, it's 50-50. James, working out the math, trading one MNQ, I need to average 75 points, so 150 bucks a day in the green per day. That's average, right? Not, you know, that's the average. So your green days are going to be a little bit bigger because you're going to have some red days mixed in, some break-even days maybe. To get a $3,000 payout each month, is this realistic for seasoned traders? Of course it's realistic, yeah. When I say don't look at dollar amount as your goal, huge trap. And it's not a trap because it's going to make you fail. You know, it's fine, but it might increase the emotions a little bit, which could make you fail. But don't set a goal based on dollar amount, because what's going to happen is you're going to look at that goal and you're going to hit it, and then you're never going to grow. And the whole point here is to grow as big as we can, because otherwise, what's the point? Right, and this gives you so much leverage that you don't even have to work 8 hours a day to keep growing. You could trade for, you know, maybe 2 or 3 hours a day and continue to grow. So what I do as far as goal is I look at what's the average range of a New York session right now. A really, really good goal for most traders is to try to make 25% of that daily range on average per day. Now, lifetime goal, like top of the top, like if you can pull this off, you're one of the best traders on the planet, is to make the full day's range in points. Not of that specific day, but the average at that time. The full day's range in points on average per day. That's 4 times better than a quarter of the day's range in points, right? But start with 25%. That's a really, really good goal. And even getting there, you're wildly successful. Wildly successful. Yeah, I mean, listen, if you really are not enjoying what you're doing, you can like pretend for a few weeks, few months, maybe even a few years. I don't know. I mean, I'm just not wired that way. The way I've always looked at life is like, if you have a boss, and I get it. Like, real life is real. You have a family, you have responsibilities, you need a stable income and a lot. I get it, okay? But like, let's look at big picture thinking here. The way I've always thought about this, since before I understood an ounce of economics as a child, was if you have a boss, they are a person just like you, and if they can be in that position, why the hell are you beneath them? Right? Are they better than you? Are they more deserving than you? Fuck no. They're just a person who got there doing something. So be that person. As you can see here, the bulls are definitely seeing that little ascending support and trying to hold it. You can also see, though, it's kind of fading. Right? I mean, you're starting to get kind of that weak, like, mushy bounce, like wicks on the downside and the low end of that little range. If we just see this break downside, it wouldn't surprise me. Probability right now is not good enough for me to take that, but if we did see a break downside, I would look for a short setup and sell that short as soon as I could. But let's see if this just returns to the top end of the range. But we have to understand, this here is a mushy bounce. Wicks and mushy lows. Slightly lower low than this, right? I mean, just price action, basic stuff. It's nothing magical. It's just, hey, what's going on here between the buyers and sellers as time goes on? Yes, Jim. Exactly. And the Fed is very concerned with their reputation. All right, we got 3.5 minutes left here on this 5-minute bar. Kind of in the middle now of what would be the range. Of course, this range needs to update as time goes on, so we're kind of looking at, you could argue this, you could argue this, kind of the midpoint of both of those. Again, not a huge fan of doing things in the midpoint, or in the middle, I guess, like half or third, I'd say. Probability is the lowest in here. Banks, you know, it's like, well, why is it still trading then? Because banks are making decisions all day long. Building positions, scaling in, scaling out, one contract at a time, believe it or not. Oftentimes up to hundreds, thousands of contracts. But for us, we're not, you know, we can't take nearly as many trades as an institutional algorithm will, so we got to be a little bit more selective. All right, how we doing? Can I give this account away yet? $300 likes and I'm giving away a 50K test account for free at Take Profit Trader. Can we do it yet? Oh, good Lord. Come on now. It is burning a hole in my pocket. Tell your friends, tell your mother. Tell the person who said you know, the trading's not going to work. All right, minute 15 left here on this 5-minute bar. You know, now again, it's really tempting. There's plenty of room, okay? But the higher this gets in the range, yeah, see, the more the bulls push this signal bar up into the range, the more is at risk and the less profit there is with a similar probability. Man, what I really would have loved to see here is if take this wick away and have this bull bar close like here. I'd slap that rollover on in a buy, risk this curl, and look to get a push up through this high with a few stops, better than 1-to-1 reward to risk with probably about a 55-60% probability in that case. The higher this goes, the numbers just get slaughtered as far as expectation. Jose, would you say being a scalper is the best way if I only have time to trade from 9:30 to 10? Honestly, Jose, no, not at all. Not at all. I would say that the best way, if you literally only have 30 minutes, is to come in as soon as you can, get as much screen time as you possibly can, and try to put on the best swing that you possibly can for the day. Even if it's a range market, just put the stop somewhere that makes sense where you're not going to get skunked. Go to work, and you'll find out if it worked at the end of the day. Put a take profit where it makes sense. Don't make too big of an ask in a range market, right? And just do something that makes sense and leave. If you only have 30 minutes, I don't think you should be scalping. It's a really tight. Well, you have time, you know, probably to put on a reasonable swing in 30 minutes, at least on a lot of days. But again, you know, 30 minutes, Jose, that's pretty tight, man. Or, you know, honestly, Jose, if you really only have 30 minutes, you could run what originally was the first thing that let me go full time. Cover everything my now wife and I needed. Net sell option strategies. A whole portfolio. If you know what you're doing, takes 15 minutes a day to manage. It's not a big deal. And there's inherent edge because theta decay, IV crush. There's inherent edge if you take enough trades and you manage them correctly. Yeah, Vinny, I think people underestimate how intently you have to watch a chart to scalp. Swings are where it's at for minimal time. Yeah, man, hey, listen, guys. If you're like, I don't even really like looking at charts that much. I mean, the reality is you probably shouldn't be a trader. There's probably something that you could make more money and be happier doing. Just be real here. But if you're like, nah, I really like trading, but either I can't, you know, sit for hours and hours a day, or I just don't want to, which is reasonable. I get it. I don't think you should be a scalper then. It's just too hard in a small window to make scalping work for a living. What I really think you should do is just swing if you don't want to spend much time at all on the chart. Yeah, I'm not interested in taking a breakout trade here. I'm far more interested in just scalping the range if we can actually get to kind of an edge after a strong push through the range. Ideally, we'd get a push to the outskirts of the range and then a small confirmation bar to reverse back into the range. That is probably my favorite trade in a range market. Because probability is pretty damn good, and reward to risk is pretty damn good, which equals a good amount of edge. Doesn't mean you're never going to get stopped out, obviously. But whatever has good edge, man, I want to take. All right, back in two. All right. And we are still in this little range, man. Yeah, this range is really tightening up. The ATR has not really collapsed yet, but these ranges on these recent bars, we're looking at 18, 18 to 20 in the last 10 minutes or so. But ATR is still holding up at 26, but it is getting a little bit tighter. When you get these full bar ranges, like, each bar is testing pretty much both sides of the range, it gets really, really even probability, which is not great, right, to trade. So you kind of got to wait for a breakout. I gotta tell you though, guys, if you're holding off on trading your fundeds in this market, I get it. I guess I still think that you should try to find some trades that have edge, but I get it. So it's a good time to trade evals. It's a good time to beef up. So when the trend market hits, you have maybe 5, 10, 15, 20, 30 funded accounts that you can hit when we have a little bit more edge in the trend markets, right? But there's still edge to be had here in the range markets. But if you do want to beef up, man, Apex right now is 80% off, and you can pass in 1 day. So you can commit an afternoon, pass some of the evals if you use code BIG, B-I-G. Of course, Take Profit Trader, daily payouts is their big thing. Really big deal over there is 30% off and no activation fee with the same code, code BIG. I gotta tell you, I'm really interested in scalping the outskirts of this range. And the range that I'm looking at here, I mean, we can just draw it. You know, arguably, I would probably update this. Don't overthink the ranges. Something like this, you know, is probably the average of what most people would draw. And then, of course, I would call this up here. You know, you could draw it as like an ascending resistance. I'd probably draw this as just a flat. So we got a big wedge. Essentially, you draw it and it's like, oh, clearly that's there. So it wouldn't surprise me at all if we saw this wedge break upside. However, if it does break upside, it's pretty low probability that it goes very far, to be fair. So even if that does break upside, I'm not thinking, you know, big old trend day. I'm thinking much more, okay, range day, find something that makes sense to fade it back into the range, is what I'd be thinking here. All right, guys, so listen, hey, you know what I'm looking for? I get the same questions over and over again. I know a lot of you guys feel like you're kind of right there. You just need to turn the corner. You're probably burning through evals. You're probably burning through fundeds. I get it. Listen, guys, I can't even tell you how many people have come to me, not publicly, behind closed doors, and said, hey, I've burned through 40K. On evals, fundeds. Hey, and that's light. I've burned through 6 figures. People have come and told me this, and they've burned through 6 figures in evals and fundeds, and they have not yet gotten a payout. Something's wrong, okay? I'll tell you what. This is the best money you will spend on your trading. I promise you. 30 minutes, my uninterrupted, brutal attention on improving your edge. Book me for a consult, and it will save you, at minimum, if you're serious, thousands of dollars on fundeds. For those of you guys who are dead serious about trading, you're not here to spin the roulette wheel. You're not here for fun. This is an absolute fucking no-brainer. Okay? All right, guys, I'll see you tomorrow morning. We'll be back at it. You guys know what I'm watching here today. Have a good one. Be patient. Let it come to you. And when it comes, hit it hard. Let's go. Have a good day.